Welcome back to Talk Tickers. We're your shortcut to the actionable intelligence that's buried deep inside earnings calls.
And today we're tackling Nukin Enterprises Q3 2025 results. Our mission, as always, is to sift through the noise for you, the experienced investor.
We're going to focus on three things: Q3's financial performance, the big strategic vision for 2026, and where the real high-stakes bets are being placed.
Exactly. The moves that could really change the company's valuation.
Okay, let's jump right in with the results snapshot. So Q3 revenue was $364 million.
Which is right in the middle of their guidance range. And, in this kind of macro environment, just holding the line on revenue is, well, it's a win.
It really is. The top line looks stable, but the real story, I think, is how they controlled their own business.
That's it. Look at the earnings per share. It came in at 34 cents, which was right at the high end of their guidance.
And that doesn't just happen.
Not at all. That result is all about disciplined cost efficiency. They delivered strong EPS, even while fighting a pretty significant 40 basis point headwind from foreign currency.
That currency drag is no joke. They had to run really tight just to stand still, which makes that EPS number look, well, pretty resilient.
It does. And before we get into the margins, we have to mention the one regional outlier.
Latin America.
Absolutely. Just a monster quarter. Up 53% year over year. It's a huge proof point that their model can work, and work big, in the right market.
So if Latin America is the proof point on the revenue side, what's the single most important financial detail from Q3 on the operational side?
Oh, it has to be the gross margin expansion. It's pivotal because this suggests it's a structural improvement, not just some short-term blip.
So the overall gross margin was 70.5%, up 40 basis points.
Yeah, but that's the blended number. The real power is when you strip out the noise.
The core Nu Skin business margin.
Right. That hit 77.7%. That's a jump of 120 basis points from last year. And what's really fascinating here is that this is the fifth quarter in a row of adjusted gross margin improvement.
So it's a clear pattern.
It's a pattern. It tells you their strategy of optimizing the portfolio, selling more high-margin devices, higher-end products, is fundamentally working. It's changing their cost structure.
And that structural improvement gives them options, but you also have to manage your spending. Let's talk about selling expense. SE was down this quarter to 35.8% of revenue.
Well, some of that is just timing. They didn't have any big conventions in Q3 this year.
Yeah.
Management is basically guiding for that to settle around 40% going forward.
Okay, but holding SE at 40% while you're getting ready for two of the biggest launches in company history, Prism.io and India, it does raise a question, doesn't it?
It does. Are they underinvesting a bit now to protect the bottom line?
Maybe.
Look, it's a calculated risk. They're trying to be laser focused with their investments, putting it all into things like the digital backbone for Prism.io. And their G&A, their general admin costs, they remain really lean.
And all those savings flow straight down. We saw operating margin expand to 5.9%. That's up from 4.2% a year ago. That's real momentum.
And you see that financial discipline on the balance sheet. They ended the quarter with a solid $252 million in cash.
And they put their operating cash flow, which was about $27.7 million, to good use.
Yep, they paid down debt.
Right.
Reduced total debt by $20 million. So their net cash position actually got stronger. That gives them a war chest for these big Q4 launches.
So with all that execution, management tightened their full-year guidance. They narrowed the revenue range, pulling the top end down just a bit to a max of $1.51 billion.
Right, but at the same time, they raised the bottom end of their adjusted EPS guidance to a minimum of $1.25.
So what does that signal to you?
It signals high confidence in their profitability. They know they can control their costs, but they're admitting the revenue from these huge new rollouts. Prism.io and the initial India launch is still a bit of a black box.
Okay, this is where the story gets really fascinating. The entire future of the company is being staked on this massive pivot.
It's all about two growth catalysts.
Let's start with number one, Prism.io and this huge shift they're making into what they call intelligent wellness.
The market context is just massive. I mean, the wearables market is already at $84 billion this year. The nutritional supplements market is pushing $500 billion, expected to hit $700 billion by 2030.
And consumers want to track their health, but they have no idea if the supplements they're taking are actually doing anything.
That's the gap. Prism.io is designed to fill. It's a platform. You've got this non-invasive device that measures your antioxidant levels through your skin.
And it pairs with an AI-powered app. And they're not just using some off-the-shelf AI, they're training their own proprietary language model.
Exactly. And their competitive edge here is It's pretty unique. They're already the #1 beauty device brand in the world.
And they have over 20 years of research in this space.
Plus data from 21 million body scans globally. That data set is their moat. They have a massive head start.
And the economics of this new device just change everything. Right now, they only have about 1,500 of their old clunky scanners out in the field.
Just 1,500.
Yeah.
Contrast that with what's coming. They expect to place more than 10,000 Prism.io units in Q4 alone.
10,000 in one quarter.
And then tens of thousands per quarter in 2026. This is a massive shift in velocity, and it's because the device is cheaper, it's portable, and it's designed for the whole family to use.
This is all about the LTV, the lifetime value.
This is the number. This is the whole thesis. A subscribed customer generates 7 times greater lifetime value than a one-off transactional customer. 7 times.
Wow.
So if Prism.io works, it completely changes their revenue from lumpy one-time sales to stable, recurring wellness revenue. And the market pays a much, much higher multiple for that.
And this is their answer for the North American market, which has been a real challenge for them.
Yeah, they're moving the conversation away from just social selling of beauty products to integrated family-based health. It's a device that could be as common as a scale in your home.
Which brings us to the second big catalyst, India.
Yeah, the scale is just mind-boggling.
Yeah.
1.4 billion people, a booming middle class that is totally digital native.
But the way they're launching is really smart. It's not the old school capital-heavy way.
No, it's a digital-first model, minimal bricks and mortar. They're partnering with Infosys to handle all the local tech. It lets them be nimble.
And they're managing risk by doing it in phases. They start next week with a pre-market opening, a multi-city tour.
The goal is to get some early revenue, but more importantly, to learn. Learn the consumer behavior, learn the difference between Mumbai and Delhi before they go all in during the second half of next year.
And what I find unique is that they're going in with both skincare and nutrition from day one. They're bringing Prism.io and localized products right from the start.
It's a dual pillar approach.
Yeah.
It really de-risks the entry.
So let's pull back for a second. While those two are the future, Q3 did show some decent dynamics in their existing business.
For sure. We saw sequential growth in Europe, South Korea, Hong Kong, Taiwan, and even mainland China, which was driven by their True Face skincare line.
And Southeast Asia Pacific was strong, especially Australia and New Zealand. They put in a new business plan there that seems to be working.
And management specifically called out that Prism.io is going to be a perfect fit there with their TR90 body transformation system. The data from the device feeds right into that existing platform.
The CEO was also pretty blunt about the rest of the industry, saying the broader beauty sector is, quote, lost in macroeconomic uncertainties.
It's a stark contrast. Nukin is carving out this clear lane in intelligent wellness while it feels like their peers are still fighting over the same crowded space.
And that crowded space is social commerce. The North American revamp is a direct reaction to that post-COVID affiliate marketing chaos.
Right. Management's point is that in a distracted world, their greatest strength is their dedicated global sales force. Real people, real relationships.
It's a powerful story. Arm the trusted sales force with this new transformative tech and completely re-rate the business.
It is a business at a true inflection point.
Which I think brings us perfectly to our final segment. This is not financial advice, but it is the outrageous but plausible trade idea.
All right, let's pitch the investment committee. What's the trade?
The trade is simple. We go long Nukin Enterprises, and we focus exclusively on the explosive growth we think is coming from that 7x LTV Prism.io customer.
Okay, lay out the rationale.
The rationale is that the current stock price is punishing the company for its legacy beauty business and its very public struggles in North America. The market is completely underestimating how fast Prism.io is going to be adopted.
Why? Why are they underestimating it?
Because they're thinking of it like the old expensive scanners, they're missing the lower price point, the portability, the family use case. It's a totally different animal. It's going to drive adoption way faster than anyone's model currently predicts.
So what's the really outrageous part of the trade? The catalyst?
The outrageous part is our assumption about Q4. We assume that those 10,000 new units they place, a 6-fold increase in their installed base in just 3 months, will convert very quickly into tens of thousands of new high LTV subscribers in the first half of 2026.
If that happens.
If that happens, it forces a massive and very swift re-rating of the entire business. The valuation narrative shifts completely away from direct sales metrics and toward a recurring SaaS-like wellness revenue model. The stock price has to gap up to close that valuation discount.
It's a high conviction bet for sure. It all hinges on that LTV conversion being scalable.
Exactly. So to quickly recap our deep dive, Q3 was all about disciplined execution, great margin expansion, great cost control. But the future is all about Prism.io and the massive India opportunity.
It's a classic dual transformation. They have to manage the old business while pouring resources into the new one.
So for a final thought for you to take away from all this, just consider the long-term impact if the Prism.io device actually becomes as common in our homes as a bathroom scale. It would fundamentally shift the company from a direct seller of products into a personalized health data aggregator, a completely different business, and one with a potentially much, much higher value.
A fascinating possibility. It redefines their entire asset base.
As always, Talk Tickers is for informational purposes only. This is not financial advice. Please do your own diligence. And thanks for joining us for this deep dive.